Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. Well, over the last 3 trading consecutive days, the Australian dollar is attempting to recover from this bearish outside range day from Tuesday. The market first of all initiated a bear move after the RBA kept interest rates on hold, but the statement was somewhat dovish and possibly maybe leading on to some speculation that there could be a cut in November, and also viewed by many economists as well. Nevertheless, we are trading the top side of the range at present, although the MACD is trying to recover above the zero axis along with the midway point from the RSI. There is somewhat good resistance around 71.92 with this 60-day moving average. After the recent couple of rejections from this level, may do so again and look back towards the support coming in around 71.45 and lower down towards the region of 70.65 to 85 from where the Australian dollar initially sold off. Overall, I feel the market most probably will keep to its bearish stance until we reach its objective, which is somewhere close to 70 cents. The euro still contained by this level of 118.10 after previously rejected this level. However, one thing to note is the midway point on the RSI is still holding quite well at 50, and the MACD is also getting a couple of little notches above zero, giving a weak bias to the upside. Nevertheless, until we get a close above 118.10, the bears should continue to focus on the 117.15 level, maybe even lower down towards the bottom side of the range around 116. Well, as the bulls cheer from the break of 105.90 figure, you can see that there has been lack of momentum. And also the fact is the RSI is starting to drop back towards the midway point after breaking above it not so long ago. Do be on your guard and trade to the point that a break back underneath this level around 105.60 could see a further decline. But I was about to say that keep your stop losses and take profit according to your risk management, just in case we see this reversal foul and a foul break from this trend, which as you can see is was quite significant. And the break should have continued quite firmly, but it hasn't. So that's why I'm a little bit skeptical if we can carry on up to 106.30 to around about 106.50. The pound still holding to its negative case after posting a bearish outside range day and also the rejection of 130 figure 10 to figure 20. Keep an eye on these indicators if you are trading from a negative side. The fact is if we see a close above that 130 figure 20 in New York tomorrow morning, it would give further indications to the upside. But I feel that there is a weak signal in play, but the MACD is holding to a bullish case. Nevertheless, with the outside range day waiting confirmation and a move under 128.70 probably could just be that, and we see further weaker play. It is expected to see further risk towards the downside again as the outside range day is being contested to negate the bear call, but not quite broken as of yet. The RSI is somewhat losing its momentum also. Until we get a break above 138, then the risk is still towards 135.80 and reassess from there. Well, as you can see, gold is now testing this resistant line, coming in somewhere close to around 1,915. Not a level that I would call resistance until we get a break above 26, as there is a little bit of concern that the market is attempting to try and break higher and negate this bearish outside range day after previously rebounding from it from 69.72 earlier this week. Keep an eye on the MACD as well as the RSI because it is firming up. Now, a break above 26 could possibly bring in a swing towards the region somewhere around 1,970. So a good 45 point rally, or around that 35 to 45 point rally. As you can see, it was very spiky up here from the foul tops. Maybe even see the bears again. This recovery that we're seeing at the moment is still holding after a 3% rally last night, with the talk of the hurricane that's approaching the Mexican Gulf. Is the market is getting a little bit concerned as they're shutting down some of the employees on the rigs. Still, the market still got a little bit more work to do on the upside. the indicators are a little bit weak. So I'd be very careful trading from the long side in case we get this failed move and see a snap back towards the region of around 39.5. Well, that wraps it for today. Thank you very much for joining me. And as always, look out for the intraday report. Hope you enjoy the great start to the day and to the weekend.